Hi, I'm Tom Ritchie and welcome to Neighborhoods, brought to you by Omak Mortgages. So what's it take to make money in real estate? Well, stay tuned because we're going to find out right after these messages. Hi, welcome back to Neighborhoods. So as I mentioned before we went to break, how do you make money in real estate? It's a question that I get asked a lot. And I thought, you know what, it's finally time just to sit down and talk about some income properties. So it could be anything from a flip to a buy and hold to a rent to own. There's a lot of different things that you have to understand when it comes to actually purchasing one of these properties. And don't worry, you're not going to take just my word for it. So I'll go through some calculations, but I have the fire prevention officer with me today. And I'm also going to be discussing how you finance that property. So we'll get into that in the coming segment. So as mentioned, you can look at flips, you can look at buy and hold, you can look at rent to own. So talking flips, don't get fooled by what you see on television today. I know you're watching television right now, but there's a lot of shows out there that are showing you how you can make money flipping a property. And what you need to understand is that for every one you see on television that's successful, chances are there's 100 people that have failed. So you have to be very careful when it comes to this. You have to know budgeting. You have to know people in the trades. You have to know a good real estate agent that understands how they're going to get their money back out of that property for you. So we're not going to get too deep into flips, but we are going to go through some calculations. One of the things that you need to understand as well is the mindset of a real estate investor. And I think the biggest fear is, and it is a fear that you have to overcome when it comes to investing in real estate, is the unknown. So big difference between risk and risky. Differences are education. I'm going to help with that a little bit today, but what I'd like everyone to do, and if you haven't read it, you need to read Rich Dad Poor Dad. Now, some will argue, you know, it's an older philosophy book. The investment strategies don't apply today, but if you take anything from this book, you'll take the mindset. And the mindset is that there's a difference between an asset and a liability. And the difference is that one puts money in your pocket and the other one doesn't. So everyone thinks, hey, my house is an asset. And I beg to differ. I'm sorry. If it's taking money out of your pocket, that is a liability. Same with a car, right? Okay, so if it's taking money out of your pocket, liability, go get Rich Dad Poor Dad and read it. It's a great read. So education. Education will help in overcoming this fear. People may have the money to invest in real estate, but they still have this fear. They have friends that have invested. They have neighbors who have invested. They have family that's invested. And you know what? You're only ever going to hear the bad things that come along with real estate investment. So you're not going to hear someone come up and go, hey, Tom, you know what? My tenant paid their rent last month. Well, it doesn't happen like that. What you're going to hear is, oh man, you know, the toilet broke down, I had to go and fix it, or I had to get a plumber in, or this is costing me this much. There's a ton of good tenants on the market that are looking to rent good property. And it's up to you to provide that as a real estate investor. So you can be a slumlord if you want. Apparently there's money in it, but I don't suggest it, okay? So let's look at, one of the things I want to mention was passive income, okay? So Rich Dad Poor Dad, the philosophy is a passive income is something that's going to put money in your pocket without working for it. Now, there's still work, okay? There's education, there's the initial investment, there's getting over that fear. Passive income is attainable, but it does take work and it continues to take work. The idea is that you don't have to work as hard for that money, okay? And that's what a real estate investment can actually provide for you. So in looking at some of the calculations, there's some terms that you need to know, okay? The first would be gross operating income, okay? Another one is net operating income, and then a cap rate or capitalization rate. And we're going to break these down for you so you can actually understand them. They should be up on the screen so you can follow along with me, okay? So if I'm looking at my sheet, just hold on for that slide. It's coming, okay? So gross operating income. That is all the income that a property is providing you, okay? So it could be the rent roll, it could be from leases, it could be laundry facilities on site, it could be anything there that is actually generating that income, okay? So you're going to take all that income from that property, that's your gross operating income. Next is your net operating income. And your net operating income is all your fixed and variable costs, okay? So for instance, property taxes, property insurance, maintenance, utilities, and the savvy investor will also include a vacancy rate, okay? So vacancy rates, we can get into that further, but typically 5%, okay? So what you're going to do is we're going to look at, let's say, just to keep things simple, we're looking at a $200,000 purchase price, okay? So a $200,000 purchase price, let's say it's a duplex, okay? So $100,000 per unit is one way to budget it. Your gross income between the two, let's say you're getting $900 a month. That's $1,800 a month income, okay? Multiplied by 12, because we're going to do this on an annual basis, is $21,600, okay? So now you're going to take your gross operating income and you're going to minus your fixed cost to help determine your net operating income. So in this case, we're going to say that this property's taxes are $3,000. Insurance, $1,200. Utilities, we're going to say that there's some common utilities that you pay. Sometimes tenants will pay their own utilities, but in this case, we're going to say that you pay utilities of $700 per month, okay? And then let's add in a little maintenance, snow removal, maybe some painting and that sort of thing, okay? We come to a total of $5,400, okay, and that's your fixed costs, okay, fixed and variable costs. So what you're going to do is you're going to take your gross operating income and you're going to minus those costs to determine your net operating income, okay? Now, in this case, you have $21,600 minus $5,400. Gives you a net operating income of $16,200, okay? And this is used to determine the feasibility of this investment, okay? Now, cap rate or your capitalization rate, simple calculation, okay? You take your net operating income, divide that by your cost of investment, okay? So in this case, $16,200 divided by 200,000 times 100, and that'll give you a cap rate. In this case, 8.1%. For Woodstock and surrounding area, that's a pretty good cap rate. Now you can also go further and determine how long that investment will take to pay for itself, and it's simply you take 100% divided by that cap rate gives you how many years. So in this case, 100% divided by 8.1 gives you 12.3 years. I'd jump at that investment. So I hope you're able to follow along. PVR this so you can return to it and come back to the calculations. These are the simple calculations that will help you understand an investment's feasibility, okay? When we return, we're going to be talking with Jeff Slager of the Woodstock Fire Department, Fire Prevention Officer, so we can understand what we need to look for when we're getting into a multi-unit dwelling, okay? We'll see that when we return. Hi, I hope you're enjoying this episode of Neighborhoods, but I do invite you to check out our Facebook page where you can get information on past and future episodes, but not only that, you could win some great prizes from our sponsors like the Woodstock Fitness and Racket Club. Stay tuned right here on Rogers TV. Hey, welcome back to Neighborhoods. Okay, so as promised, we're joined by Jeff Slager, Woodstock Fire Department,
yes.
Fire Prevention Officer.
Yes.
Big job.
It's a busy one, yes.
It's a busy one. Okay, so Jeff and I go way back. We actually, before you even got into the fire department, we were slug and tube. Anyway, so we've moved on quite a bit from then. So Jeff, I wanted to get you in because when it comes to multifamily, multi-unit dwelling spaces, there's a lot of questions that people have, and some of them jump the gun. They get into them without knowing what they're getting into, and then all of a sudden, they have all this work. And you guys have a tough job because you go into do an inspection and all of a sudden there's a bunch of work that needs to be done, and these owners get pretty upset.
Well, that's the thing. We unfortunately, we're never liked when we're there because when we come, we're setting up whether you've got to spend further money into the property, whether you're selling or buying. It can kind of become a contentious point. If you're selling it and suddenly you find out you got to spend a lot more before the sale, it never goes well. But it keeps everybody safe, so that's where we feel happy with.
Okay, so I do have a list of questions. We're going to try and get through them in the amount of time that we have. Okay, so people see listings. Now, as a realtor, I know, but please explain, what is a legal non-conforming, let's say duplex?
All right, with the term legal non-conforming means that the property, if it was to be built today, it would not be able to be in the format that it is. So if it's a triplex, like a 3-unit residential, say, but the area that it's in is only zoned for 2-unit residential or more, if it was there before they changed that designation for the zoning, it's allowed to stay as a 3-unit residential as long as it maintains as a 3-unit. If anything changes in it, it goes back to a 2. It can never go back to the 3. It loses the legal non-conforming aspect. And then it has to stick through there. So you want to be aware of first that your zoning meets what you're getting.
Right, okay. So retrofit, one of the clauses and conditions that we use as real estate agents is retrofit. Now,
Yes.
this is an old clause, it's an old condition, and I still argue, I say, well, retrofit technically doesn't apply, but what does that mean, really?
Well, retrofit actually is one part of the fire code. When it first came out, it started out in 1992, it was the go-to clause for everything to make sure that you meet retrofit and that. What we try to push on right now is a fire safety inspection, because that includes the provisions of retrofit. So what we're saying is that a building that is older meets the minimum fire code and minimum building code requirements for fire safety up to that. So we don't just deal with the retrofit section, we deal with the entire fire code for you. So we're looking at all aspects of it.
Okay. So question then, you mentioned 1992, but the code has been updated since then.
Correct, yes.
When is the last update?
The most current code that we're dealing with right now is actually the 2007 version.
Okay.
We are in the process of, there'll be a new one coming out. There's a new building code that starts January 1st of 2014. The fire code usually comes about a year or so after that. So there'll be some provisions there. We're not 100% sure what they are, but you know, you never really know.
Yeah, as an investor, that makes me cringe hearing, oh no, another fire revision, right?
It can be a little concerning, but again, it's usually based on any tragedies or anything like that that's occurred through through coroner inquests.
No, and I joked about it. It's you guys aren't always warm welcome when you show up, but you're there to do a job. You're there to keep everyone safe.
Exactly.
And some owners, they look at it and view it as, oh, this is ridiculous. It's being like this for 100 years. Why does it need to change? And the fact would be what, that someone's being injured or something? Or?
There may have been provisions, correct, that have occurred since the last revision, or as things have been, the way they have, that recommendations have come forward. The most recent one for us to reference may not be for the residential, but we're moving to, there's going to be sprinklering in all vulnerable occupancy homes.
Okay.
That's a direct result of a number of fatal fires dealing with that. So, unfortunately, tragedies affect current buildings and do bring forward change.
Okay. So when looking at a multi-unit, what are the main concerns? Okay, and now I mean, in your job, obviously, everyone that pertains to a fire code is a concern, but let's fire separations, that sort of stuff, right?
We look at the main type of things that we go through is compartmentation, means of egress, and detection.
Okay.
So we want to look at the compartmentation means basically that each unit in the multi-unit dwelling and every common area is kind of has its own protective shell around it.
Right.
So all the residential units will have a rated enclosure around them.
Okay.
The common elements will have a different, like the stairwell, and that will have their own rating. So that if something pardon me, happens in one of them, it's going to be delayed in its progress to the other ones to allow everybody have an opportunity to get out. So you want to make sure there's no holes, cracks, gaps, that type of thing between the two units, and any shared walls. If it's to the exterior, we're not too concerned with that. It's on the shared spaces, like so floors, ceilings between upper and lower, and the walls on the shared sides of things.
Now, someone's looking to purchase a property. It's a multi-unit. Let's say, again, in this case, it's a duplex.
Yes.
Their representing agent may put in there that they request a letter from the fire department. Okay.
Okay.
That letter is not going to guarantee it doesn't need any work.
No, that's correct. Like there's multiple different levels of what the letters will state. A common one that we get is usually either from the agents or the legal representation that asks for a file search. What that is we go through our existing file on the property and see is there anything outstanding or anything current as far as a violation. Now, we try to explain that if we haven't been to that property, if we're not aware of it, we don't have anything on file. So that's all you're getting.
Right.
You're just saying we don't have anything on file, but we may never have been there.
Right.
So we try to encourage people that with income property, get a fire safety inspection so that you know it's as of today. Additionally, if we issue a clearance letter for something that's older or saying, we are here on this date and it was closed, all we're able to say is on that date, everything met.
Right.
Taillight warranty, we pull away.
Things could have changed.
People may have
then.
changed things.
Right,
the doors that were locked that shouldn't have been, they click the lock and off it goes that. So it is kind of up to the buyer or the vendor to make sure that everything is as current as possible.
Okay. Before we go to break, I want to get a couple more things in. So batteries in a smoke detector.
Yes.
Okay. I myself have not been fined. But I know, friends that are investors, they've been fined before. How do you control that? How do you control if a tenant's pulling the batteries out of a smoke detector?
Documentation on the owners. It's getting paperwork that shows that when you go through on a regular basis that you're testing the smoke alarms with them there. They sign off on it to show that yes, it worked at that time. If the owner is able to provide that for us, We then have to interview the occupant and find out, they have to admit that they've disabled it. That's a very hard charge for us.
Yeah.
But the best thing is protect yourself.
Okay. And quickly, just one last thing. Things have changed recently with Woodstock as far as issuing, so there's a report and now it's an order.
Correct.
Right? How does that affect us?
The main thing with that is it gives the owners, or the building owners, a chance to appeal the order to the fire marshal's office, keeping out of the court system. Previously, it was an inspection report. You don't comply, we take you to court.
Okay.
Now we give you an order. If you don't like what's in there, then you can appeal to the office of the fire marshal. Or what we do is, if you're continuing to work at it, but you're not able to get it done in the time we've asked for, as long as we're moving forward, we continue to work with you. We're not heavy-handed in the sense that you didn't do it too bad.
Right.
It's, okay, well, you're doing work. We'll extend the order and continue on from that. It gives an opportunity to appeal.
Perfect. Well, Jeff, you know what? We could go on probably for an hour. Yeah. There's so much, and it's joked around my office. I have an MBA in this fire code thing because I've had to deal with it so much, but which is far from what you know. But I really appreciate you coming on. Thanks so much for joining us.
Thanks for having us.
And we'll be returning with Mike Rogozynski of Omak Mortgages. Thanks for watching, and stay tuned. Hi, welcome back to Neighborhoods, brought to you by Omak Mortgages. I got to stick the title sponsor in there because guess what? Title sponsor's with me. How you doing, Mike?
I'm good. How are you, Tom?
I'm very good. So, Mike Rogozynski of Omak Mortgages. We've had you in a couple times, and the last time you wore a suit, right?
Correct.
And you know, I screwed up, and I texted Mike, and actually I was about to text Mike and realized I forgot to send him a text. So here he is. So you know what? I take my suit jacket off. It makes you more comfortable.
It's okay. It's a winter day, so I dressed appropriately.
Mike always looks good anyways. Anyways, Mike, I wanted to get you in because there's a difference between a investment mortgage or a multi-unit type mortgage, a commercial mortgage, and a residential mortgage. Big difference, right? So I don't know where to begin because it's quite involved, but what's the biggest difference between getting a residential mortgage and getting an investment property mortgage?
Technically, they're still both residential mortgages, up to a certain number of units. And most lenders will finance up to 4 units today. So on the residential side, meaning they still have the lower rates, not as in-depth underwriting guidelines as when you get to commercial. Usually when you get to 5 units or greater, then it becomes the commercial side underwriting for multi-unit apartments. The biggest difference between a normal residential mortgage for a single-family home and a multi-unit is the down payment amount. If you're buying it strictly for residential real estate rental purposes, the minimum down payment is going to be 20%.
Okay. Which is difficult for some people to come up with.
It is. It's not something that you see most individuals buy as their first property. Normally, a lot of lenders are going to ask that they own their own property first as well. They want to see that they can handle that type of financing expense.
Okay, so, but there is, I'm not going to say loopholes, but there is ways around it because some people, they may be living in, let's say, a semi. They decide, you know what, I'd like to acquire a multi-unit. So they look at a triplex. Now they're going to move on. It's going to become an owner-occupied. So less percentage down now?
Yeah, if they were buying a triplex and they're going to live in 1 unit, then it's 10% down payment. And then that way they get the benefit of essentially living in 1 unit and probably having the rent from the other 2 units pay for them to live in their unit. So it's a great investment.
These calculations, when it comes to their TDS and their loan to value, all that, it all comes into play though, right? So you can't use 100% of rental income.
No, correct. If you're buying a subject property rental, we're allowed to use 50% of the rental income added back to their total income for qualifying, but we have to use 100% of the expenses. If it's an owner-occupied rental, it's a lot easier than a standalone rental if you're buying it just as a subject property, just based on the way the debt servicing works.
Okay, so there's no cash-back mortgages for an investment property?
No.
Okay.
No.
Did they ever exist?
Probably at one time. Well, you could buy rentals with no money down at one point, and then CMHC gradually changed.
Let's go back to those days.
Well, unfortunately, the arrears rates on some of those finance properties were a little higher than a normal mortgage.
Okay. So you mentioned 20% down. Now there is ways. People think, "Oh man, you know, a $150,000 property. There's no way I have $30,000 to stick down. Plus, your legal fees and land transfer." But what if it's say a baby boomer? Not even a baby boomer, but someone has equity in their home. how can they pull equity out of their home to purchase an investment property?
They could look at whether or not they have a mortgage on their existing home now. If they do, they can look at increasing that mortgage, depending on the equity position, maybe putting a secured line of credit.
Okay.
And those are acceptable forms of down payment or equity for down payment to purchase a rental as well. And we see lots of clients do it. And you mentioned Rich Dad, Poor Dad earlier. I have read many of his books.
Right.
And again, if your house is free and clear, it's not doing any benefit to you. No. You should be using that equity to get you cash flow and make you more money, and that's a great example. Take equity out of your principal residence to purchase an income producing property.
And not even just your principal residence. I mean, you could be a seasoned investor and you may have 3 or 4 properties. Sure. And you have enough equity sitting amongst those properties to pull it, right? But what is the loan to value ratio on that? Is it 80%?
80% still. Now 80% is the maximum. And that's not to say all lenders will. There are a couple lenders that'll do 80. There's a lot that'll do 75.
Okay.
So it really depends on where the financing comes in. And we've had clients come from an institution say, well, my bank told me it had to be 25% down. Well, at that institution it did, but maybe over here it's only 20%
so
down.
Different lenders are doing different things.
Correct.
Right?
And we've had lots of clients who come in and just do that. They buy the property, they fix it up, then they refinance it, pull out the equity to buy another one. And it is a great business.
Right. So let's say it's someone young, they're smart, they've read Rich Dad, Poor Dad. I tell everyone, I mean, my child, my daughter, 10 years old, she understands the concept of buying real estate as an investment. Yep. But let's say they haven't bought a house yet. They're not going to live in it, but it's an investment property. Still 20% down?
Still 20% down.
So if they come in and they say investment property,
automatically 20%.
It's 20% down. Yeah. Now, you had mentioned the difference between a brokerage and a bank. You have a little bit more flexibility because you have a plethora of lenders that you can go to, right?
Correct.
So what would be the best situation nowadays?
Probably the best, we've got a lender who will do 20% down, so 80% maximum financing, and they'll allow up to what they say 16 doors.
Okay.
So there are limits on the number of rental properties some lenders will do as well. They may only want to do 4 rental properties. So if you have one that's willing to do that many doors, you could have technically 5 or 6 or 7 properties, depending on if it's duplex, triplex, single family. So that's the most flexible, and that's the one that's being used quite a bit.
Okay. Well, it sounds like a great lender. So one last thing that I want to discuss before we end is, people, it's the fear element again, okay? Is it going to subside by coming in and speaking with you at all? I mean, that initial investment, hey, I'm putting $20,000, $30,000, $40,000 on the line. What can you do to help reassure them? Is there anything?
Realistically, it's a personal decision. They have to get comfortable with it. We can help educate them on it, make things a little easier, kind of walk them through the process. But time and time again, they got to do their research. There's so much information online that they can look up about owning a property. And again, the easy part may be buying it and owning it. The harder part might be being the landlord and having to deal with all those issues.
Property management companies.
Exactly, exactly. And I've owned rentals. I don't at this point. I have other investment opportunities that I look at. You obviously have owned rentals and still may own some. So again, it's a personal thing. They just have to get comfortable with it. Education is the best way.
Exactly, and that's my philosophy is education. I really hope you've learned something, but we're going to go to break. And Mike, thanks so much for joining us.
Anytime.
Would you like to be a guest on Neighbourhoods? We're looking for people who have bought, sold, or tried selling their house privately. Feel free to contact us. Welcome back to Neighbourhoods. Well, I hope you've learned something today. The idea of this program was to teach you something when it comes to investing in real estate. I'd like to thank my guests, Mike Rogozynski of Omak Mortgages and Jeff Slager from the Woodstock Fire Department. And if you have any questions, as usual, you can text me. We went through a lot of information, but I can put you in contact with any of the people that were on today. But if you have any questions regarding investments, just shoot me a text. The number's on the screen. We'll see you next time on Neighbourhoods.